Desperate times call for desperate measures, and the old bait and switch is back. Let's chat about how to rate shop the right way and what to look for. Stay right there. I'll be right back.
You were talking about money, right?
Separate yourself widely from the pack moving forward. Is that something that you would be willing to have a discussion about?
Because they didn't get it.
They
were
probably
like,
didn't get it. Yeah.
To follow up with your clients to generate more leads.
Happy Friday, everyone. It is Mark Jones, your Millennial Mortgage expert, branch manager of Directions Home Loan at Cantera here in San Antonio, host of Key Factors podcast, and co-founder of ReviewMyMortgage.com, the largest index of mortgage programs nationally. And this is your daily Millennial Mortgage update. So without further ado, as I was looking for the daily mortgage update rates that Google has in the last, let's say, month or so that I've been using, it's strange because it is no longer able to be found in the system. Everywhere that I looked, unfortunately, it was just gone. And there's a couple of reasons as to why it possibly could be gone. Who knows? Maybe tomorrow I'll search and it'll be there. But as of right now, what I am seeing a lot of in the market that I want to get into is the way that lenders are currently marketing to consumers. In my opinion, it's a bit tricky. So I'm going to bring you guys an article that I have found from, it is Mortgage Hippo. Mortgage Hippo is a technology company that partners with mortgage companies nationally. But they wrote this blog article that I want to read to you guys and then give my take on it and then actually jump in to show you guys what you should be looking for when you're shopping for rates. Every time I see ads from mortgage companies, it's all about super low mortgage rates. I don't understand the obsession with the interest rates other than to grab your attention and pull you into the office if you're in the market for a mortgage. We can't help but be intrigued by shiny objects, sort of like how I can't help but click on every single BuzzFeed article I see about turning 30. Or this, are mortgage companies simply responding to people's lack of understanding about mortgage products and their fixation on getting low mortgage rates, or are mortgage companies actually the drivers of this irrational behavior by consumers? The point is, don't fall for those stupid ads. Read the fine print. I just recently saw a mortgage ad flaunting a 3.25% interest rate. When I looked at it closer, then the mortgage rate was for a 15-year mortgage and for borrowers with assuming credit scores of 720 or higher. Or if you don't meet the assumed credit score threshold, then that 3.25% is completely unattainable for you. But it got your attention, and it may even have gotten you inside their office or on the phone with them. What mortgage companies should be advertising is how they will help you find the right mortgage for your needs. And let me kick some knowledge to the masses. It's not always the one with the lowest mortgage rate. Let me give you an example. Jane and her husband, Paul, just recently got married and have their first child on the way. They are currently renting an apartment in Chicago, but want to move out to the suburbs where they can have more room, less noise, and potentially nosy neighbors. They decided that becoming first-time home buyers is the way to go and know that this home is just their starter home. They want to have a second child soon, so they figure they'll need to move again in approximately 3 years to a larger home with another bedroom. Jane and Paul talked to their mortgage broker, and she presented them with two mortgage options for $200,000 home loan. Loan A is a 30-year fixed at an interest rate of 4% and closing cost of $5,000. Loan B is a 30-year fixed and interest rate of 4.5% and the closing costs are only $1,000. Which loan should Jane and Paul choose? Let's take a look. And essentially, guys, I want you to understand that the only thing that should play into consideration in this is your break-even point. Meaning, am I making the right decision for me and my family and our finances to pay the extra to get this lower rate? Or are you doing it based off of just wanting to have a low rate? Basically brainwashing, so to speak. But let me finish up this article real quick. It says, loan A, upfront closing cost is $5,000, monthly of $954.83 over 36 months. Loan B, upfront of $1,000, monthly payment of $1,103 over 36 months, which is the 3 years that they intended to be in the property. Assuming that the rest of the loan features stay the same, loan A and loan B which has a lot higher interest rate, results in nearly $2,000 savings to Jane and Paul over the expected life of the loan. Now, why is that, guys? I want to just quickly show you or just tell you how to calculate your break-even point. If you are intended to be in the home, and you have to be realistic when you're making this decision of, let's say, 3 or 4 or 5 years, you would then take the cost that it takes in order for you to pay to get an interest rate versus the actual posted what your credit score, debt to income ratio program deems you should have as far as rate, and subtract the difference between the two. You subtract the difference between the actual monthly payment, and you also take the actual cost to divide that by the amount of savings. That in itself will give you a number that you then divide by 12. That will give you the amount of years it will take in order for you to recoup those funds. And if that is the case, if your recoupment, it takes longer than the time that you intend to stay in the property, then it's not a good decision for you to pay to get a lower interest rate. If you're doing it based off of a payment that you're trying to achieve, in my opinion, you should either lower your price point or even put more money down, which doesn't really change the mortgage payment too much, but at the end of the day, it's going towards equity and not interest. A lot of folks have this misunderstood by just wanting to tell their friends and family that they got this low interest rate, but it's not always the best decision when it comes time for your own personal finances. So I wanted to show you guys a couple of examples of how mortgage companies, as of right now, are advertising things, and how you, as a consumer, are perceiving them and what things you should actually be looking at. So let me share my screen here. Today's mortgage rates. Type that in the Google machine, and let's go to loan market. So immediately we are baited with a form. It sets the parameters on which route we'd like to look at. So let's look at New American, sorry. Here's another form, essentially intended to capture your information at the end. So again, don't fall victim to just that if you're just looking for mortgage rates, right? So we continue to go back to see at what point is this company going to show me their interest rate. They have not yet. Oh, but I click backwards and look at this ad that pops up, and it is telling me within this ad, it says Texas mortgage rates just dropped. You know, and I know that that is not true. Okay. I find it very funny that because I clicked away from the ad, it has a mechanism that knows that. So when clicking back towards that window, it's trying to bait me back there with words, with catchphrases that essentially trigger our endorphins or whatever you want to call it that make you want to click. It says expert recommend locking in mortgage rates ASAP, top rated direct lender with competitive rates, no social security needed for pre-qualification. That to me, guys, is a huge red flag. Well, then what good is this price quote if you're not pulling my actual credit and knowing what liabilities, what credit score I have? Are you just going to go based on what I'm telling you? Let's look at a couple of other ones here. Let's go back to this. Let's go to another, and keep in mind, as you look in Google, all of these are actually being paid to be on top. That's why you see ad next to it. Let's look at bank rate. So we go to bank rate, boom, there's a form. It wants me to fill out a form and put information in. So we're looking at purchase rates. And as we do that, watermark home loans pops up and it shows an interest rate of 3.375. So you as the consumer are thinking, why is everybody talking about interest rates are up in the 4s, almost 5s? This company is saying at 3.375. Well, guys, over here in the fine print, it has 1.775 in regards to your actual points that you're being charged. That's in addition to whatever fees are associated with that as well. There should be some assumptions as well. Look, there we go. Here's our advertiser disclosure. So these are the things that you should be looking for when I have seen a couple very recently that are showing you a 15-year mortgage rate, and it's very small fine print that says this is a 15-year when instantly we're automatically thinking 30-year as consumers. So if we go down here for the 30-year that we're actually looking for, it says advertised loans for 30-year fixed, fully amortized, rates as low as 3%. Then it says not available in all states. Loan discount points is 1.72. Borrower's credit score of 740 or higher. You're 20% down. There it is. So those types of things are the rate assumptions that they base a current interest rate that you're shopping, and they have to do that because they have to be upfront about where those things are. Now, there are rules against how big and where those disclosures need to be, but as you can see, even a 3.75, you're having to pay 1.539 points in addition to the actual loan company's fees. Then we scroll down a little bit further and we go, okay, 30-year fixed, 6.37%. Holy cow, why is that so high? And still even charging the 1.524. So if we have two different rates on the screen, 30-year fixed mortgage charging about the same, I find that very strange that they are literally almost 3 points away from each other. A lot of the crazy things going on right now, and it is very important that you look at the fine print. And that's what I mean, guys, about the bait and the switch. You need to pay attention to a couple of things when you're looking at online rates, because a few things occur when you are just seeking out interest rate or the lowest rate possible. Number one, you get what you pay for. So if you're trying to get the lowest rate possible, that means that the company that you're working with has to have very, very low overhead, or they're paying their employees very minimal amount in order to get the deal. So the service on that loan and the recommendations and options that you may be presented with may not be the best for you. It could be just to the level of expertise that loan officer who knows what kind of experience they have in advising customers and their mortgages. One of the things you need to look at is rate assumptions. Rate assumptions is what they're basing that interest rate off of. In addition to the fine print, there's always some verbiage in there that says rates may vary upon application. This is with 20% down. This is a 15-year fixed mortgage. And I've seen some advertisements that come out and say that they're adjustable rate mortgages. Be very cautious. If you are looking for a rate quote and someone to share their screen with you, be honest with you and transparent and educate you on how interest rates work, visit us at LaCanteraLoans.com. And one of our experts would gladly jump on a Zoom call, but I will tell you, we do need to pull your credit in order to get you an accurate interest rate. We're not going to sit here and tell you, yeah, we can give you a rate quote without pulling credit. That in my opinion should be unethical, guys, because there is no interest rate that we can give if you don't have a credit score. So I hope this information is received well. If you know someone that is going through the mortgage process and maybe needs to hear this information, maybe they have essentially been brainwashed because of the marketing efforts that these bigger banks, online lenders are putting out there, please share this with you. If you are liking these videos, please like, subscribe, and make sure to follow. I'm Mark Jones, your Millennial Mortgage expert, and you guys make today count.
You were talking about money, right?
Separate yourself widely from the pack moving forward. Is that something that you would be willing to have a discussion about?
Because they didn't get it.
They
were
probably
like,
didn't
right.
get it. Yeah.
To follow